Good evening, everybody. Welcome to this webinar on the Business Line Knowledge Series. This time the subject is on, is it time to end quarterly results? Just to set the tone for the conversation, we have a expert, very eminent panel of experts lined up here to share their views with you on the subject. And the balance is equally divided in terms of for and against the question. And just to set the background for this webinar, we have been having a very bad quarter, as you know, with April and May washed out for most companies in terms of sales, revenues, and of course, profitability. In this background, we had an article written by one of our panelists here. He's a resource person here, R. Anand. R. Anand is a chartered accountant with a couple of decades spent in Sundaram Finance, and then another decade in EY as partner. And he wrote an article questioning the need for quarterly reporting and whether we should move away from that. The corona crisis is only a pig for that. He's arguing that on a permanent basis, quarterly results are not good. This article, which we published in BusinessLine in the last week of May, elicited tremendous response on the social media. And Mr. Mohandas Pai was one of those vociferous against such a move. And so we thought we'll have a webinar on this, gathering experts to arrive at a proper consensus on what is the way forward. Mr. Mohandas Pai, as you all know, is very well known. Doesn't need any introduction. Former CFO of Infosys and very eminent chartered accountant. And he's now an intellectual who's seen on television. We have Mr. T.T. Srinivasa Raghavan, Managing Director of Sundaram Finance, who again needs no introduction. And I know Mr. T.T. Srinivasa Raghavan, Mr. TTS, as I would like to call him, from my various interactions with TTS over the years. I found him to be vociferously against quarterly reporting. He's always felt that it's hobbled companies in their endeavors, in their pursuit of short-termism, and it promotes short-termism against taking a long-term view. We have Mr. Jain Gupta, who again needs no introduction at all. He is Managing Director of Stakeholder Empowerment Services, a proxy advisory firm, shareholder proxy advisory firm. And Mr. Gupta is also in the same league as Mr. Pai. He argues that we need to continue with quarterly results. And then we have Mr. Srinivasan, CFO and Executive Director of Bosch India. And Mr. Srinivasan, Srini as I would like to call him, is also against a quarterly reporting cycle, but he feels that we should move to half yearly with a lot more information being shared and with adequate safeguards being built in. So this is the background to each of our panelists today. And I would like to first structure this discussion in such a way that Anand starts off as the resource person setting off the debate, giving the background to what he wrote. And then I'll come to each of the panelists one by one. We'll have a 30 to 40-minute discussion followed by QA for about 20 minutes from readers. Let me tell you that we have more than 1,000 registrations for this already. The Zoom platform is hosting 1,000 viewers right now, and we are live on YouTube as well for the remaining who cannot log on to Zoom. So this is quite a popular platform for BusinessLine, which we started about a month ago. And it's caught on. And the fact that even for a subject such as quarterly reporting, which will not interest too many people, we have over 1,000 registrations, proves the kind of interest that's there in the market for this. So let's start off with the discussion with Anand setting the tone. Anand, can you take over, please?
Thank you, Raghavir, and thank you, BusinessLine, for taking this wonderful initiative to discuss, as Raghavir rightly mentioned, what appears to be a very dry and innocuous subject. But somehow it has gathered so much of interest. In fact, I was telling Raghavir that I've been writing in the Hindu from 1989 and for BusinessLine from 1994. I get a lot of feedback for all my articles. But I think this article which I wrote, which was published exactly a month back on 20th May, my email box really got flooded. Lots of people felt that the subject was very topical in today's context, notwithstanding the health crisis that looms large. And my role as a resource person is very clear. I don't want to get into any judgment on what is right or what is wrong. I want to lay down the landscape, what provoked me to write this article 1 month back. and leave it to the experts on the panel to decide what is really good in the overall ecosystem of corporate reporting. I think that is what we should aim after 1 hour 20 minutes of deliberation, which we are slated today. Now, there are two trigger points which sort of caused me to write this article. And one was a very live incident, slightly humorous, but live. I thought I should narrate it to the audience today. And this was in the month of January, well before the COVID broke out. And I was sitting with the CEO of a fairly large listed company, and he was looking absolutely dejected and crestfallen. So I asked him, sir, what is the matter? Are you worried about something? Is the business not doing well? Profits have plummeted. What is the reason? He said, no, everything is doing well, but I'm really completely exhausted. Fatigue has set in. I've just completed 3 committee meetings and 1 board meeting, and it's taken a heavy toll on my energy. And he said, this Q on Q is really completely energy sapping as far as we are concerned. He didn't leave it at that. The next sentence actually forced me to think deeply. He said, 80% of my time, and I'm the CEO of this company, I'm spending time on compliance, I'm spending time on meetings, draft minutes, final minutes, and so on and so forth. Time permitting, I'm attending to production, distribution, marketing, and sales. So it was a very telling statement. And I went back and started scratching my head and little went back to history. If you look back, the year was 2000, 2001. That was the Y2K year. I distinctly remember. SEBI amended clause 41 to say from annual reporting, listed companies will now embark into Q on Q reporting. That was the year 2000, 2001. We have now seen 20 years of quarter on quarter reporting. Corporate India embraced this very radical change in 2000, 2001 in right earnestness. There was a little bit of hiccup here and there, but they managed it. And we now have a 20-year time frame now to come to grips with Q on Q reporting. I think this period is long enough for us to seriously sit back and take stock. Has the overall cost of managing this rigor of Q on Q treadmill sort of activity commensurate with the benefits that we are deriving out of this approach of Q on Q reporting? Now, let me not be misunderstood. I think all these stakeholders of the corporate environment need to understand the advantages and disadvantages of quarter on quarter reporting, particularly investors who have put their hard-earned money into the company. They need information. There should not be any information asymmetry at all. But let us take the second important trigger for me. I looked around. What is happening around us? UK in the year 2014 embarked on from Q on Q to a half-yearly reporting. They did it in a very calibrated fashion. And today, I am told 60% of the FTSE 250 companies are now only reporting on a half-yearly basis. Singapore, in the month of February 2000, passed a law or amended their law to say most of the listed companies will now only report on a half-yearly basis from here on, except companies which have got regulatory issues or some corporate health issues. They will probably report on a quarter-on-quarter basis, but others will move to half-yearly reporting. In US, in the last year or so, there has been a very heated and serious debate going on as to whether listed companies should now go away from Q on Q reporting and move over to a half-yearly reporting. So this is what is happening around us. I am not for a moment suggesting that just because other countries are doing, we should do that. I am not suggesting that at all. But are there pointers for us to take from other countries to do a reset now? The COVID has come at a time where a lot of things have got to be reset, probably including this. Look at issues in a very, very pragmatic manner. Probably look at past baggage as part of history. Look forward and find out whether Q on Q has served the purpose for all the stakeholders in the system, whether we need to assuage some of the difficulties or the rigor of a Q on Q reporting and maybe move to a half-yearly reporting with all the safeguards built in so that there is absolutely no information asymmetry as far as investors are concerned. This is the thought process I had. I don't want to pass a judgment now. There are 4 panelists who are going to debate this issue. But my only request to all of us present here is at the end of 1 hour and 20 minutes, we need to arrive at a possible, tangible solution which will work with the regulators, work with corporates, large companies, medium companies, small companies. We'll have to arrive at a solution which is acceptable to all concerned. Thank you, Raghuveer, for this opportunity, and I send this back to you now. Thank you.
Thank you, Anand. We'll start off, Mr. Pai, straight away. Mr. Pai, I know that you are very vocal, votary for quarterly reporting, and you think it's not a good idea to move away from that. So, can you just explain your position and in the context of what Mr. Anand has just set out?
Thank you very much for inviting me. Let me start by saying what are the situation before quarterly reporting became mandatory. Information was flowing out of companies to many financial intermediaries. If you go to the office in Mumbai, they will tell you the production of every cement company in the country on the first of the subsequent month. They tell you the financial figures on the 5th of subsequent month, and insider trading was very rampant. The need for quarterly reporting is to reduce the asymmetry of information between stakeholders who are investors, public markets, and the management and vested interest. And that can only come if the periodicity of reporting is enhanced, and that's why quarterly report came about. And in the last 20 years, it has served India very well because more information is out in the public domain. Companies report periodically, and the regulator is well aware of what is happening. Even though prosecution for insider trading is not as to the standard that we expect, but nevertheless, I think there's been a sea change, and there is no case for doing away with this because we see even big companies, big banks announce results within 20 days. We are now living in the age of automation, where the problems of doing the accounting and doing everything else is reduced considerably. I remember we started doing quarterly reporting voluntarily in Infosys, I think in 1996. We were the first in India to do it, and we continued to thick and thin, and it has worked very well. Second, we've seen in the financial markets that analysts have come up, and most analysts give estimates of the company's operations. So there's asymmetry of information between the analyst whose reports are read by various investors and on whose analysis they make judgment, and corporations. And this leads to great volatility. The flow of information is not periodic, and it takes more time. Because whether you like it or not, analysts are going to give the projections, and the projections will be in the public domain, and most investors will go by analyst estimate as it were. Next is, there has been a tremendous increase in discipline in accounting and financial reporting in this country. I hope some of you remember that when maybe 25 years ago, shareholders meetings were always in the month of September, dividends were paid in the month of October, November, everything was delayed. And now shareholders meetings start off in May end, by June, most of them have finished it, the dividend is paid, the year is over. So for management, having managed a very large company for a fair number of years, we find that if you're able to do your accounting on a monthly basis, complete it, do a quarterly, do the reviews and release it, you're finished for the quarter, you can concentrate on the next quarter. Otherwise, the flow of information inside and outside will not be, symmetric. And also within the enterprise itself, the flow of information is not symmetric. If you want to run a good organization, have focus, you must grow the organization. That means all the players inside should get information periodically at the same time. And when more people get information about sales and revenues, the chance of it leaking out will always be there and is always high. I remember that we are always afraid that, even though we reported within 10 days, the end of the quarter, we completed audit within 8 days, somewhere there could be a mishap, some information could leak out, but we were ready. So this brings a great amount of discipline. And the argument that it takes away the long-term focus is not tenable at all. Long-term focus and the investment long-term focus is a way of communicating to your stakeholders. If you're able to communicate to stakeholders and say, we are making this investment, our margins will be less, and it will take us 2 or 3 years, everybody understands that very well. So the communication aspect is very important. And to say that short-term quarterly reporting has taken away the focus from long-term investment is not borne out by facts. Yes, in the United States, there are a set of issues which cause this statement to come out because most of the CEOs' compensation are led to stock options and a huge amount of dependence on stock prices. And stock prices rise or fall based upon information flows. And many of the companies try to do buybacks, try to do short-term things, just to make sure the CEO's wealth goes up. So that is a market aberration which requires a different solution. The solution is not to do with quarterly reporting. The solution is much to do with the way the compensation is paid. So this argument that take away focus is not there. And then we see that the timely disclosure has led to better results and better discipline and the focus on results. Anand said the cost of doing that. I don't see the cost at all. The cost is extremely marginal because the audit is done once a quarter, then the roll-up accounts is done in the last quarter, and the time on audit may be the same spread over 4 quarters. And the auditors are all used to it. If you have half yearly, then the auditors also will be very stressed. Of course, it's not our concern. So the cost is not a problem. And just imagine in the COVID times, if you did not have a quarterly reporting and you had half-yearly reporting, people will not know the impact of COVID on enterprises for the quarter April, May, June. They will not know it in July. They'll not know anything. The information will take a lot of time. And in this kind of a volatile environment where information can be, worth its weight in gold, if we do not have information at periodic intervals, then I think much will be lost and the market will not be able to get the information and market will not be a kind of well-regulated market that we want. So I would end by saying that quarterly solves the knowledge asymmetry. There has to be proper periodicity. It brings in internal discipline. It brings in reporting discipline. The argument between long-term and short-term is untenable because long-term is a series of quarters. And even within the enterprise, there is symmetry of information with all stakeholders who can focus and people can focus on the future. Communication is a very important criteria between stakeholders and management to make sure the long-term is taken care of. The cost is a very, very marginal issue. And extraordinary circumstances like the global financial crash or this COVID will show you the need for periodicity, and quarter is the best way to do it. And the last 20 years of experience in India has shown us that this is the way forward. Even though we are not perfect on a scale of 1 to 100, I think we are maybe at 80, 85. Before quarterly, we probably were at 20, 30. Thank you very much.
Yeah, thank you, Mr. Pai. That's quite a powerful set of arguments that you made. The most important one is that it reduces information asymmetry between institutional investors and the common investor on the street. That's a powerful argument, all right. But I'd like to see hear what Mr. T.T. Srinivasa Raghavan, who's equally strong views on the subject on moving away from quarterly has to say on this. Before I say that, I want to point out that just early this month, there was an article in the Wall Street Journal by none less than Warren Buffett and Jamie Dimon of JP Morgan. And they set forth, again, very good arguments for why America should move away from short-termism, should move away from quarterly reporting and look at a longer time frame. So, Mr. Srinivas Raghavan, you can take over now.
Thanks, Raghu, for first inviting me to participate in this webinar, along with this very eminent panel. I'm very happy to share my views with you and the rest of the participants in this webinar. Mohandas Pai is a difficult act to follow, and when he speaks with the kind of passion that he does, one has to drum up almost the same amount of passion to counter what he said, and that's what I'm going to attempt to do. I'll start with a couple of very broad statements. Number one, with all this talk of disclosure, transparency, and governance, which has happened in the last 20 years, and don't get me wrong, I'm a very big subscriber to all of these concepts. But in all of this, there seems to now be a default belief that the majority of individuals and the majority of corporations are some way crooked, right? So that seems to be almost a default position. And therefore, you need analysts, you need advisories, you need the media to play police, right? To make sure that people don't step out of line, which I think is very insulting. I mean, if you're anyone who's involved with corporate India, I'm sure you'll feel insulted to be thought of in those terms. That's number one. Number two, because of this belief, I think a lot of legislation and regulation in this country has been brought about based on a least common denominator. So find whoever's the worst guy or the worst set of guys and make laws that will catch them. So it doesn't matter if there's 80% of them who are better, than this least common denominator, too bad, they too have to fall within the ambit, which I think is hugely problematic. And number three, to me, and I'm sure there's lots of people who run businesses will agree with me, business is more like a marathon race and less like a 100-meter sprint, right? So to say that short-termism is not the right argument, I'm afraid doesn't work for me. And when you look at the case for when you make the case for information asymmetry, I find it strange sometimes that certain companies, if you look back over the last 20 years, how regularly, quarter after quarter, will report a number, which is in the low, mid, high 20s as quarterly profit. Now, I've run a business for, well over 20 years, and I struggle to produce the same quarterly profit quarter after quarter for 20 years, simply because business isn't run like that, right? Depending on the industry in which you operate, without COVID, there's enough uncertainty in terms of seasonality, in terms of cyclicality, in terms of unforeseen events, windfalls, all kinds of things happen, right? And there is no way there's anyone who's got a handle on all of this all the time. Now, on top of all of this, now we've got this wonder called Ind AS, right? Ind AS is all about fair value accounting, right? So on a given date, right, on March 31st, let's say somebody sneezed or somebody coughed somewhere in the world and our markets go for a toss, your fair value goes completely haywire, right? In terms of the investments, if you hold an investment portfolio. So to me, this whole argument about information asymmetry doesn't really hold water. And what we're talking here about is not too extreme. We're not saying go back to the dark days when you reported once a year. All we are saying is moderate this. Of course, we need transparency. Of course, we need disclosure. Of course, we need to make sure that people don't, benefit by asymmetry. There is no insider trading. There's no arguments about any of these things. We're all agreed on that, right? And as I say, most Indian businesses are people who want to earn an honest living, right? Nobody is here to do crookery or to outdo regulation or outdo legislation, none of that, right? We're all honorable citizens, and I would like to believe that as Indians, we think of ourselves as being honorable people, not cheats, not people who somehow want to subvert the law, right? So we are honest people who want to do an honest day's work, do the best we can, and make life good for all our stakeholders, not just the investors, but for our employees, for society, for our customers, for everyone, right? So there is a much larger involvement here than just shareholders. Shareholders are a very important part of the stakeholder community, but they're not the only one, right? And the point that Anand made is absolutely right. I think it's worth doing a survey, Raghu, in BusinessLine to find out if CEOs today find that they are spending more time on compliance and less time on business and strategy. This is a question certainly worth asking, because I think you will find uncomfortably that the incident which Anand narrated, it will not be exception, but much more rule in today's world. So I think I will stop there.
Great. That's a good match to Mr. Mohandas Pai's arguments. Business is a marathon and not a sprint.
I can't hear you, Raghu.
Yeah, you can hear me now?
Yes.
Yeah, I said that's a good set of arguments you put forth to counter Mr. Mohandas Pai's equally powerful arguments. And business is a marathon and not a short-term race, not a sprint. And also that rules should be framed for the majority, not for the microscopic minority, which could be trying to flout the rules all the time. That said, I would like to hear Mr. Gupta's views on this issue. Mr. Gupta, you were telling me the other day why quarterly results are important and why we need to stick to them. Can you start off, Mr. Gupta?
Thank you, Srini, and thank you, Hindu Business Line, for inviting me. I would start with what Mr. TTS said. And he said, and you quoted, that business is marathon, not a sprint. I agree. But who has asked you, or who has asked the business not to report marathon, but report a sprint? The issue is that even in quarterly reporting, you should report about how you are running the marathon. Today, even the marathon is being run, there are cameras at every point so that you know where is the progress. So what investor want is a true and fair picture where the business is standing today and where the management proposed to take the business to tomorrow or in the next quarter or in the next 1 year or next 2 years, and to report what was the path that was to be taken and where we are, what is the deviation and why the deviation is there, is the deviation long term, short term, and how we are going to do it. So the problem is of the understanding. The understanding is that quarterly reporting doesn't mean that you are ending the business in that quarter. You are just reporting the progress. Second issue that Mr. T said is a very important issue of corporates are crooked. I don't agree corporates are crooked. And especially Mr. TTS, the group to you belong, has been known for the good governance. But the problem is that 10 good people are not able to do that good to the society or business as one bad person causes the problem. So that 10 good are not equivalent or not sufficient to take care of one bad. That is why when the regulators are saying that, say, okay, even if it is causing a little bit trouble to the good people, my domain, my stakeholders are much larger. I have to protect them because one bad thing will hurt 1,000 people. So rather than hurting 1,000 people, I request 20 good people, please bear with us. The other issue that which I 100% agree with Mr. TTS is on Ind AS. Ind AS is probably not understood and probably not the right thing because there are many provisions in Ind AS which does not give the right picture, a fair picture to this. The other thing that I always say, that whenever I want to cut fat in my body, I say I want to eat pastry without the top cream. So for the corporate, the problem of compliance is like a top cream. Whenever something happens, you want to remove the compliance and you want to do everything. That's not. Compliance is integral part of the pastry. You cannot separate that. Any attempt to remove the compliance and the compliance cost and everything is there, you are ready to take care of every cost, but not the compliance cost. And as Mohan said, in today's world, it's not there. Today, if everything is digitalized and with all this COVID, everything is going to be more digitalized in future. So you can have on everyday basis in a system that what is your sales, what is your revenue, everything. Some adjustments would be required. So I don't agree that the time is required. But then I read with interest Mr. Mohan's article, and I will take one by one point. He says the investors are in touch on daily basis. Which investors? Some institutional investors are in touch and they are privy to information which large portion of investors are not there. That is not the right thing. Then he says that material developments are reported. I agree, material developments reported. But what is the impact of that development and how it has impacted the business in last 3 months? Nobody knows. And you are asking me to wait for 6 months. Then the second issue is this: tomorrow, if we say that we will have trading in a stock market only once in a week on Monday and next Monday, then everybody says, look, 6 days or 7 days gap is too long and lot of things have happened. So if lot of things can happen in the stock market for 7 days, I think the reporting also is required. Then you are saying that he argued that regulators are keeping tab. I wonder if regulators are keeping tab the way it is expected to be. If RBI was keeping tab on many things, probably nothing would have happened. If SEBI has the power to keep tab on each and everything, probably we'll be looking for something. But the most important thing that Mohan brought out was the insider trading. In US, if you do insider trading within 3 months, you are in the jail. Here, you do insider trading, build your villa, build your castle, live peacefully all throughout your life, and by the time case decides, and that will be in your favor, you are dead. Then the most important, rather I would say, most unreliable thing with the credit rating agencies are keeping tab. And if you look at the problem for last 10 years, 90% of problems in financial markets have come because of the failures of credit rating agency. So can we trust them? Then there I can go on something, but then the basic problem that is there is understanding what is required to be reported. Nobody is asking you to report all the rosy picture and say that we are on the garden path. No, because Mohan said that is the reason, because my bonus, my share price, everything is related to that. So I want to paint a rosy picture. That's wrong. Nowhere it was intention of the regulation to do this thing. And we can discuss further in this. So that is my preliminary point.
Thank you, Mr. Gupta. Srini is someone who has a middle view on this. He's of the view that we should move away from quarterly reporting to half yearly, but we should bring in adequate safeguards and probably increase the disclosure that companies make to investors. So Srini, can if I were to borrow Mr. Gupta's words, can we have the pastry and eat it too? Is it possible? Srini, your mic is muted. Your microphone is muted.
Yeah.
Yeah. Oh, it's muted again. It's muted again.
Can you hear me now?
Yeah.
Yeah. So the whole question of quarterly reporting or half-yearly reporting is not linked to the ability to report. All of us in our companies are having monthly reports or weekly reports and all of that. So the key question is, what is the behavior this quarterly reporting is stimulating? And that's where the big question is that we need to ponder. I think the purpose, as we all know, the purpose of every company is to deliver long-term sustained value creation in an environmentally and socially responsible manner. And when you look at this as the objective of the company, I do believe that yes, investors are very, very important stakeholders, but there are other stakeholders like employees, customers, society at large, government, and others. And hence, when you want to create a good governance mechanism, you want to create a transparency, the information that you may need to share is broader than just a set of sort of a pre-stated financial information. And hence, if we want somebody to take a judgment on the performance of the company, there is a need to be much more holistic. So I don't want to build on other co-panelists have made a lot of points, but the key aspects for me is to say that how do we then create a mechanism, how do we bring reforms that takes care of the need of multiple stakeholders? I would say that yes, specific to investors, there are investor relation meetings, there are interactions with the investors in different forums, and any major events in the company is also reported. And if I see as an investor, I don't necessarily go by a set of financial statements at the end of the quarter, but a whole gamut of information that I collect, whether it's from market information or whether from market research agencies or even from the news items or my own research, and a culmination of all of this, it gives me a view of that company. And hence, I believe that what is important for us is to move towards a more comprehensive reporting mechanism which takes care of the need of all stakeholders, rather than to say that yes, there is one set of stakeholder who wants a set of financial information at the end of every quarter, and that triggers a set of behaviors among many companies to start looking and steering the business quarter on quarter. Having said that, I do believe that if at all we move to a slightly longer reporting cycle, there is a need for safeguards. I don't believe that, yes, we will have quarterly board meetings as appropriate as every company will require. And in that board meeting, I think the quality of the board, the independence of the board, the depth of the audit committee and understanding, the devil is in details to provide the assurance that the safeguards and the governance mechanisms and the accounting principles are all being followed. These need not necessarily be linked to a quarterly reporting, but a whole gamut of safeguards and transparency that assures the board in the first manner, at the first instance, and secondly, a more comprehensive reporting which takes care of the interest of multiple stakeholders is the way forward. We've been working on quarterly reporting for more than 20 years. And yes, there has been some gains, but I don't think that just by quarterly reporting, many of the issues that we face or the safeguards have worked. Equally, I would say many companies have misreported, underreported, overreported, and the newspapers are capturing many of these, and we have seen many of these in the recent past. And hence, ensuring that the audit committee is working well, ensuring the risk committees are working regularly and working well to assess and safeguard the interest of all stakeholders is the way forward.
Thank you. Thank you, Srini. That's a very different set of arguments altogether. Mr. Pai, coming back to you, one argument we often hear about quarterly reporting is that it helps earnings smoothing. Companies often indulge in smoothing their earnings from quarter to quarter to contain volatility in the market. And talking of short-termism, there's also this feeling that companies, are hesitant about committing large investments or making major moves because they are scared of the quarterly date approaching, and they don't want to show any major deviation in their numbers. What do you have to say about these 2 points?
See, on the question of earnings smoothing, you are presupposing that the board of directors of the company are a party to earnings smoothing. The audit committees are, the risk committee is, the auditors are continuously for years and years. That argument doesn't hold water.
Is it not possible for all of them to connive and be together?
No, it's not possible. We have to accept, like TD said, that board members are honorable people and independent, and many of them are independent. They will not stand for this. You have to accept that the auditors will not sign off because there is a risk. Yes, some auditors may get short chain, may just watch the other way because they're not doing the work properly. But I don't think that will work. I mean, I've been hearing this smoothing thing for a long period of time. I don't find it to be very valid, and I don't think it's happening. Yes, in 1 quarter, 2 quarters, you can always say, I didn't make this provision, I made that provision. It always gets caught up in the next quarter. And these are temporary things that happen in terms of provisioning, which has no material impact. So I don't think that is there. And what is the second question, Raghuveer?
The second one was on short-termism. Whether companies put off investments and major financial commitments because
Raghuveer, look at what Mukesh Ambani did. He said, I'm going to invest 2 lakh crores. Well, he invested 2 lakh crores. And look at what tell me in India, which are the companies which said that because of this quarterly reporting, I have not invested for the long term. I have not found many. I don't think both our honorable panelists who are opposed to quarterly reporting have ever short-chained the company or not made the kind of investment they want. Sundaram Finance is a great company. I mean, they've been investing in the way they want to invest. They've been reporting. They've been doing everything. I don't think any of this has hurt them in any manner. I'm an outsider. I'm not an insider. It's not hurt us in Infosys. We have invested hugely. It's not hurt Vedanta. They've invested hugely. It's not hurt Ambani. He's invested the most amount of money in this country. It's not hurt the banks. So I don't know this idea that you don't invest for the long term. You see, the long term, like Jane Gupta said, is a series of short term. What are they saying? You invest for the long term, you have a strategy, you transform the company, but disclose quarterly. Now, all of us agree in this panel that disclosure is required, material disclosure is required, and we have to do periodic disclosure. We all agree. The only thing that disagree is, why do you want to give the quarterly financial numbers? If you're willing to disclose everything on time, on material grounds or whatever it is, why not quarterly financial numbers? They're a small part of the total disclosure that you normally do. So I don't think this argument is about long-term and short-term. Yes, in the United States, there's a problem because, like Jane said and I said, compensation of CEO is linked to stock prices, and sometimes they try to play the stock market, stock prices, because their ESOPs vest or they want to sell. Yes, there is some kind of abuse. We don't see that abuse in India. But the benefits of this quarterly has been so enormous. Yes, it has not stopped insider trading, but the markets have been cleaned up tremendously. Jayan has been an insider in SEBI. He'll tell you that how tremendously the market has been cleaned up. Yes, it has not deterred the bad guys. The bad guys are always there. Yes, in our society, the good guys, get shafted all the time. We have been the good guys. We have been suffering because of too much of regulation, too much of thing. But all of them are not linked to quarterly reporting. They're linked to many things else. For example, Sarbanes-Oxley came in the US, and suddenly we had this whole lot of internal checks, all the things coming to India too, because we copied that. Much of it is unnecessary. They're trying to take it away from the US. We must reduce the kind of compliances that we have is too much. Much of it in the Companies Act is also unnecessary. We can do it periodically, but quarterly disclosure and compliance are two different things. Of course, one leads to another. So I don't think this both these points hold water, because we all agree you have to disclose. So disclose the financial statements.
Interesting. Mr. TTS, a couple of questions for you. As a CEO, I'm sure you get monthly performance reports. You follow probably even on a weekly or daily basis of the revenue and earnings stream. So if the CEO can get that kind of information, what's wrong in sharing it with investors at least once a quarter, first? And second, there's always this information asymmetry between large investors and the common shareholder on the street. So the large investors, the institutions get to have separate meetings with the top management of companies. They are getting to earnings calls and all kinds of institutionalized arrangements for sharing information. Whereas the ordinary investor, the only time he gets to hear from the company is once a quarter. So what's wrong if that is done instead of making him wait another 3 months and make it a half-yearly affair?
This is not at all about right and wrong, Raghu, and I think I pick up on something that Mohandas said. See, information, you're right. I mean, today with technology and everything else, at the end of the day, you know where you stand. This is really not about that. But if you look at the totality, now if you look at regulated entities like we file, I have a department which is just filing returns, right? Mostly with Reserve Bank, but also if you look at the other companies in our group, one is regulated by NHB, one is regulated by SEBI, one is regulated by IRDA, and we have huge departments which are just filing returns. So it's not only a matter of quarterly financial reporting that we are doing, there's a whole plethora of compliance work that we are doing, right? Which means, and this is not a joke, if you came to our office at any time, you would find there are at least 20 people who represent the audit profession in different hues. Someone is a statutory audit, someone is a something else audit, but there's, all the time, there's 20 auditors auditing God knows what, and I have to then deploy 10 people to be answering the questions of these 20 auditors. So it all adds up. It's not about just disclosure on a quarterly basis. Of course, yes, we have all the numbers, we can present it. As someone said, today meetings happen within 2 weeks of the end of the quarter, all the data is available. And in any case, we ourselves file our quarter end data with Reserve Bank by the 10th or the 15th of the month following the end of the quarter. So it's not just about what's the big deal in filing it or disclosing it after 15 days. It's the totality, right? I mean, you have to bear in mind that our primary business, which our investors also will agree with, is to run the business, is to run a profitable business, build shareholder value, build stakeholder value. That should be our primary objective, not complying reporting. And that is where this argument is coming from. And as far as the large investors are concerned, whenever they want, information is available to them. The regulators get all the information on a regular ongoing basis. So if there's something that's out of line, they can catch it immediately. So, I don't see this as a problem. I think we are talking in a very limited context of, moving the post from end of one quarter to end of 2 quarters. That's all. This is not about saying we will do less disclosure, less transparency, less anything. It is only altering the frequency from 3 to 6 months. I think it's a very narrow argument, because I think otherwise, as Mohandas said, we don't seriously disagree on any of the other aspects. We all want transparency. We all want good governance. We want all of that, right? So there's really no serious disagreement on fundamentals, but there is an issue on how frequently do we do this.
One last
For a,
question.
for a person who files almost daily with RBI who's got a team, that is a bit rich. All he's saying is, look, I'll give it to everybody in the world, but not my shareholders, not the investors. Is that what I say? Come on. You're filing with everybody, so give it to us. No, I'm a shareholder. Give it to me. What does it matter?
But no, look at the time and the energy that goes. The productive, it's the biggest productivity killer that we have today.
5 hours a quarter is too much. How much does it take for you as CEO? No, you are the CEO.
No, it's not the CEO, it's the organization. The CEO has the easiest job, right?
You got a team of people do that whose job is only that compliance every single day. What does it matter?
It shouldn't be. My team of people should be out there. My team should be out there enhancing shareholder value, not doing compliance.
No, reduce the total compliance load, not a quarterly reporting.
Yeah. So, well, for the guys who have the ear of people who will do that, please do that.
I have a question for Mr. Gupta. Mr. Gupta, we have had over 2 decades of quarterly, at least 2 decades of quarterly reporting till now in India. And what we have seen is, for all the arguments in favor of transparency, in favor of disclosure, we had scandals galore. We have corporate scandals, we had financial scandals, and insider trading is rampant. And as you rightly pointed out, conviction in India is small. So it doesn't appear as if it's like COVID testing. You test less and you show less numbers. So if convictions rate is taken, India is a very clean market. There's no insider trading. But we all know for a fact that insider trading happens, and it happens in a big way in the markets. So what have we achieved at all in having a quarterly reporting structure? If we have not achieved anything, the payoff in terms of CEO time, as Mr. TT has pointed out, spent on compliance, which is better spent on pushing business. What do we get in return? We don't get anything at all.
Srini, I'll tell you something. You have criminal law for so long in this country, law against rape, law against murder and something. Have we stopped murder? No. But we have reduced. There are cameras which are there, which in case something happens are capable of catching this. So any regulation will never be able to make things perfect. It is only a step in the direction of reducing the incidence. That is one. Any organization or any regulation cannot work in isolation. The entire ecosystem has to work together. Now, in India, the ecosystem fails every regulation. And our judicial system is one which fails every law or every attempt of any lawmaker. Because when you take 20 years to dole out a judgment, I have already taken the fruit of my crime for last 20 years. And if when my legs are in the grave, whether you give me punishment or not, it is immaterial to me. That is one point. The second point is very simple, that none of us are terrorists. But when we go to airport, are we not treated the way Osama bin Laden is treated? My pockets are such, my body is such. Why? It is for my own safety. So I have to look at when I am a CEO in a corporate, but I could be an investor somewhere else also. I am doing my work as CEO in perfect manner. But how do I know that 10 other people in the companies where I have invested are doing the work correctly? So I want a quarterly reporting from them. The problem is in that I have always, and I agree with Mr. TTS, is that our regulation system is such that they want everything to be filed, but nobody reads anything what is filed. If RBI would have been reading what PNB was filing on LORs, then probably scam would not have happened. So we have a system of collecting all the garbage and never process it. So we have to go to a system where We don't want TTS to give me garbage. I don't want 100 returns from TTS. I want 5 returns from TTS, which I will examine religiously and tell TTS that this is wrong. Entire ILFS thing, how it happened, nobody bothered of liquidity mismatch. The 35-year loan was given based on deposits of 3 months commercial papers. So something was bound to happen. And then I come back to the Mohan's point. He said that the quarterly reporting is not giving us time to attend to the serious thing like risk committee. Now, I think that is the problem of mindset. The mindset is this, that I have to do this because regulator has told me. I don't brush my teeth in the morning because regulator has told me. I brush my teeth because I want my dental health. So in order to have your health of the company, you got to do that. Don't do it because regulator has asked you. The problem is you don't do it. That's why regulator tells you to do it. The simplest example is that there is a code of conduct for independent director in Companies Act. And most of the independent directors are generally plus 60. Now, I feel insulted. Somebody writes a code for me. Am I that immature? But the problem is all of them failed the institution of independent directors. That's why the code was written. So the problem is we want regulator to hold my little finger and take me step by step to everything. No, that is our failure. If we are very clear, what is my duty? I have taken money from the shareholder. I have to do, and I will come back to this monthly reporting. I used to work with Birla. In Birla, every day there is a, I don't know what is the position. Every day we used to have a parta. Daily parta used to be sent to the management. Every month and a comprehensive parta report will go, which will have every possible information. So if as a managing director, as a promoter, shareholder, I am entitled to this document, why not my shareholder be given this every 3 months? That's a simple thing.
Very, very convincing. That's very convincing set of arguments from you, Mr. Gupta. Before I open up the floor to audience questions, one last question to Srini. You're advocating a middle path approach where we have the best of both worlds, if it's possible. Now, Mr. Gupta says we should have lists of compliance, and as Mr. TTS himself pointed out, a large part of their energy and time of companies is devoted to just filing reports, which are, to put it in inverted commas, garbage, which is not even seen by regulators. Can we move for a middle path where we have less compliance in terms of filing these, reports which are no more than, worth than the paper on which they are printed, and instead use the time to share more with our shareholders?
I would say that the responsibility of the company has to grow beyond just shareholder. It has to be again to a larger group of stakeholders, which would include the broader society, the customers, the larger environment impact, and many others. And hence, if an organization or a company has to start reporting on a broader set of parameters, this quarterly reporting is almost impossible. So as TTS has said, it must be relevant information, it must be pertinent information, it is something which is reviewed by the board of directors, the audit committee, the risk committee, the environment committee in great details, and then you put out a set of data which everybody is seeing and saying that, okay, it is meeting the governance parameters and the performance parameters that I have set and I am expecting. I think that is a better. Quite often when I have met many of the investor colleagues and others and analysts, there is fluctuation between quarter on quarter. They say, oh, this has happened. Okay, we will wait for the next quarter. So even from that, yes, mathematically you may be doing a lot of ratios and others, but you are not able to really take decisions based on just one quarter. You look at a trend analysis over multiple periods of time and then have an expectation of what the company is. So hence, I believe that, yes, to go into a middle path which really looks at, yes, what is it that the whole community is requiring, what is the objective of the company, how do we help the company perform better in terms of long-term value creation rather than short-termism. And from all of this aspect, and even hearing many of the arguments on both sides, I'm even more convinced that yes, the responsibility of the company is to a larger group of stakeholders. It is not possible. I mean, even if we do a month reporting, a lot of it could be garbage, as my co-panelists have said, and hence a middle path where we broaden both financial and some of the non-financial. For example, carbon emission. This will become a very, very big important criteria in the months and years to come. So where are we reporting? So instead of having just a small narrow view saying that my investors need just a set of information, financial information in a standard format, and based on which they are having a very comprehensive understanding of what's happening in the company is actually a myth. So earlier companies also used to give a guidance, because every quarter what's happening and all the analysts used to ask, but many companies have done away with guidance because that is contrary to long-term value creation and strategy of the company. And hence, I think every stakeholder need to have patience, look at what is most realistic, look at what is more comprehensive, and that is, I think, the need for reform in this day.
Great. That's a nice way to sum up the conversation. We have some excellent set of questions from readers who tuned in. And the middle ground that a couple of them are espousing, one, Mr. Rathor, is asking, why can't we have quarterly reporting exempted for the smaller companies and restricted to the bigger ones only, where shareholding pattern is very high, public shareholding pattern is very high. And the second one is, why not report quarterly, but audit the numbers every 6 months? This is from Anand Kalyan Raman. And he's saying, why can't we have audited numbers every 6 months and report just plain set of numbers every quarter? Are these two middle grounds possible? I would like to quickly run through all of you for 30 seconds each. Mr. Pai.
Well, auditing quarterly, there's a limited review, and the limited review is just, maybe 4 or 5 days of work. I don't think it makes a difference. In Infosys, we are auditing quarterly and submitting it. It didn't make a difference to us. It's quite okay. It was streamlined. And for smaller companies, well, I think smaller companies should not get listed. Smaller companies should go to special boards like this SME market or somewhere where the relaxations are much more. If you come to the main boards, the rigor is much more. In India, unfortunately, we have too many small companies on main boards. That creates a problem for them because they don't have the sophistication, the wherewithal to follow all the compliance. Yes, overall, I believe the compliance load should be reduced, but not quarterly reporting. Other compliance should be reduced. And for smaller companies, you must have it very easy because they can't make the investment, but they must not be in the main boards. You want to be in the main boards, you want more liquidity, then you don't want to do that. That's a problem. But I agree, smaller companies should get lesser reporting.
Yeah, Mr. TDS?
Yeah. See, I think if we are talking reform, we should go the whole hog. I don't think we should do, tinkering and tweaking, because it's neither here nor there. If the belief is that quarterly is what is right, then you should do it, because this halfway house of limited review, small company, big company, that doesn't work for me. As I think Anand said, if we are in a window where we are talking reset, let's do a proper reset rather than a tweak.
Okay.
Right. So I would say, do it fully or just keep quiet.
Yeah, Mr. Gupta.
I have both views. The first is very simple, that an investor, whether I'm an investor in a small company or whether I'm an investor in a big company, my needs are the same. I need to know where my investment is going. So from the investor's perspective, I cannot differentiate between small and big. However, if a company is listed in SME platform where the rules are different, so right from day one when I have invested, I know that this company is going to report only 6 monthly, because in SME platform, the requirement is 6 monthly. So that differentiation is there. Now, what Mohan said, unfortunately, in BSc, many companies are there which would not be even qualifying even for SME platform. So the problem happens to them. So that is for the historical reason. And then once I had suggested that BSE should itself be divided into two, BSE A and BSE B, so that all those companies which do not meet the criteria of listing in NSE should go into BSE B, so that where the focus, people know the risk is higher there, the regulation will be lesser there, the information will be lesser there. So I as an investor is very conscious that what is happening there. So that is the thing. But I agree, for a smaller company that cost could be higher, but then that's, if you want to be in a big society, high society, you got to wear the clothes which high society is wearing.
Yeah. Srini?
I would say that India's entire manufacturing base is also dependent a lot on MSMEs. And if MSMEs have to grow, they have to access the capital market. And we all know that they also provide maximum employment. So if the MSME will access the capital market, I'm sure there will be a set of stakeholders or investors or Guptaji or Mohanji who will keep saying that, okay, I need a set of simple financial results. Today, if you look at MSMEs, that they have, that from a regulatory point of view, they have to follow about 220 regulations which they have to comply with at the MSME level, out of which 90 of them, if they don't comply, they are liable to go to jail. So, and that's one clear way to kill MSMEs. So we could have one more. So I do subscribe that yes, smaller companies can definitely give an exemption, but as MSME of today will be a large company of tomorrow. So from that perspective, I would say that there is a need for better safeguards, better audit committee, risk committee, and we need to ensure that these, I would say, institutions which are there in a company should be working very well, rather than to say that, yes, let's increase the number of and the frequency of reporting that is required. Because in the larger context, it is not of much use. People look at more of trends and what are the underlying story behind the numbers, rather than just a set of financial numbers, which somebody will put in an Excel spreadsheet and be happy saying that my job is done. One more data chart has been filled.
Yeah. Mr. TTS, there's a question pointedly for you from one of our readers, Louis Manoj. He's asking, there are specialized people to do each and every job of reporting and compliance. CEO can still focus on planning and strategy. Giving timely information to the shareholders is a must and must not be considered as a burden. What does Mr. TTS have to say?
I don't think this is about burden. As we said, and I think speaking for ourselves, our record speaks for itself. So this is not about not providing information or not being transparent. The question really is about, what should be the priorities, and it's not the CEO. Please, I think that is an impression that needs to go out, because actually it is a whole team consisting of senior management people who have to ensure, because as Srini said, a lot of the stuff in this country is you miss something, you could be the next guy in jail. So you can't afford to take it lightly. So as much as you've got other people looking at it, finally, as the guy who puts pen to paper and the guy who puts your signature on it, you are completely invested in it, as is everyone at every stage in the food chain. So it's not a routine activity.
So the buck stops with the CEO and he carries
Absolutely.
the can.
Yeah. And for each person who signs it, he has to be absolutely sure that he's signing something which is true and fair. Right? This is not a tick box. And if you're a company that is serious about compliance, and if you're a company that is diligent in terms of compliance, you will take that extra effort to make sure that you're signing something which is true and fair. And I'm very proud that as a company we do that, but it doesn't come free, is the point.
There is a cost to it. Yeah.
Yeah.
There is a very interesting question from Arvind Krishnan. He's taking the debate to the other extreme completely. He says, in this debate on the optimal frequency of corporate financial reporting, one aspect that is ignored is its credibility. Quarterly earnings are today subject to limited review by the auditors, which technically provides a significantly lower degree of assurance. However, this is often not understood by the stakeholders who equate limited reviews to audits. So in this debate on quarterly reporting, is there a need to enhance the assurance or credibility of the reported earnings by moving away from limited reviews to quarterly or half-yearly audits?
So if I can,
You know, go ahead.
Yeah.
if I take that, it really brings me back to what I mentioned earlier in terms of what is the quality rather than quantity. So if we say that, yes, we want to provide safeguards and protection to investors, it's better to have a half-yearly, much more detailed review so that the auditor is also assured, the board is even more fully assured, and the set of numbers that are coming in are absolutely adding up in every sense of the term, and the investors are able to provide that assurance. I think the biggest stake for any company is its credibility and reputation. And that's why even from a half-yearly perspective, all the stakeholders are able to join together and provide that credibility which the investors require on one side, but we also have a responsibility to other stakeholders as well.
Raghuveer, I want to make a point. You
Yeah.
know, for the day I joined till the day I left and later to it continued, I used to give a P&L account to Narayan Murthy at 3 o'clock on the last working day with 99.5% accuracy. So we had accurate stuff. We never had this kind of, yo-ho stuff anywhere. We had accurate stuff, right? We designed the system. And all of us, I believe, as CEOs or people who run company, get statements for every month, which is pretty accurate. And for quarter, when it goes to the board, it's pretty accurate. So I don't know how the quality can come down. Quality can be, enhanced because the quality is pretty good. The problem is there are a small set of companies. They may have some kind of, look, we are all accountants, or maybe we know accounting, right? How can you have fluctuations? Because you record on the basis of proper bookkeeping and you make estimates. Now the estimates are judgment. The estimates could go wrong, but cannot go wrong in a significant way. Yes, possible. Even for bad debts, NPAs, you make the estimates based on receipt of interest or whatever it is. The norms are very set. The rules are very set. So you set the rules automatically, you get everything right. So quality is the same, whether to limited review or audit. Limited review and audit, the problem what we have, like, our friend said very clearly, is that for many of us, the thought of doing wrong doesn't come to mind. We don't do wrong. But we are exhausted by more and more compliance. But let us not miss compliance for quarterly reporting. We must reduce the compliance. There are a lot of compliance, unnecessary compliance. We must reduce the criminal procedures which threaten to send us for jail, even for not having water in the office and all that nonsense. We must reduce that, do away with that. But let us not mix that with quarterly reporting. That's all I'm saying.
Excellent.
Raghu, I have a point.
Yeah.
See, the credit, first of all, there is a regulation that if your audited results are in variance by more than 20% from the quarterly, you got to explain. So that is first the protection given for not giving the correct. The second, as Mohan said, that it comes nowadays, it comes on the system. The problem happens when I want to make my account through the jigsaw puzzle and I want to put the pieces here and there. And then when see what is going to the picture, at that time the mistake happens. So, and that unfortunately Mr. TTS is not aware because he didn't do that.
So we almost 80 minutes, 89 minutes.
So that
yes, Srini.
Even in fairly evolved capital market like the US, there is a small group of financial investors and analysts who are also gunning for real-time financial reporting. It almost feels like they want to lay down a cable and a pipe from the company. This digital age, that can be one argument could be that why should we have a set of accountants who are compiling and all of that? Lay down the cable directly, real-time financial reporting can also happen. So I thought just add this to this discussion.
We're now almost 85 minutes into the discussion. So I think we have to wind up here. But before I do that, I'd like to go back to Anand. And he started off saying we should have a tangible set of advice at the end of our discussion. Anand, do you think we have got any tangible middle ground here?
To be very honest, Raghuveer, I'm really excited because all the panelists are on the same page. I didn't see this as a debate at all. Everybody is very common to say that a host of compliance issues are there. Some can be weeded out. That's a clear message coming out. quarterly reporting is one element of compliance. And quarterly reporting having stood the test of 20 years, whether we have to go back to half-yearly reporting, not go back, go to half-yearly reporting. But if we can provide a framework and a methodology or a format which will go to the investors on a quarterly basis without the rigor of a limited review audit or a full-fledged audit or all the rigor of these meetings, we've got the game done. That's going to be my next article.
Excellent. Look forward to that. So I have to put in my own 2 cents here. I'm all for quarterly reporting purely from a selfish perspective. Newspapers will not like to lose a stream of advertisement revenue. So I would argue for even a monthly reporting if that's possible. And I'm sure that will, gather the hands.
Srini will kill you for monthly reporting.
And stories. And how do you get more and more stories and content in the newspaper?
Absolutely. No, actually, the scope for stories goes down if we increase the frequency, because information becomes public, democratization of information happens. So my objective is completely different. So on this note, I would like to sign off. Thank you, everybody. You're all eminent panelists, experts. You took your time off on a weekend, and I would be failing in my duty if I don't place on record my gratitude to Bombay Stock Exchange. They've been listening into this video, and I'm sure they've been taking back a lot of valuable advice from here, and they've been our sponsors of this session. Thank you so much, and thanks readers for coming in on a weekend. Look forward to your next webinar next Friday. Thank you.
Thank you very much, folks. Thank you.
Thanks,
Thank you,
everybody.
Thank you. Thank you.
Thanks.
Thanks. Great
guys.
panel. Thank you. Bye-bye. Bye-bye. Bye. Thanks.
Bye.
Bye.